welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we discuss all about market fundamentals. How are experts really analyzing the current market scenario, and what should you be doing with your investments in equities as an asset class? All of this will be discussed with a special guest who's joining us. I'm joined by Mr. Kranti Badini from Wealth Securities on Market Meter. Welcome, Mr. Badini, and thank you very much for taking out time for us. The markets are yet again showing some signs of cooling off from those all-time high levels. We are seeing the benchmark indices down about 0.6% at halftime today, right now. In fact, all the sectors, barring perhaps realty with some bit of gains, they're all actually in the red right now. How are you reading this current dip in the markets? Is this going to extend some bit more? How should investors really, talk about their investments and plan their investments in the current market scenario?
Season, how the earnings season going to kickstart? Of course, what we are going to witness in the days to come is a brilliant returns from IT. Auto, we need to wait and watch how it's going to be pan out. But the auto is the sector we are very bullish on, and pharma will have a clear direction with respect to the COVID-19 and the heightened activity what happened in pharma is concerned. So pharma is going to show complete recovery, and they're going to give stellar returns. That's what our expectation. At present, investors are currently in a mood to wait and watch situation. How the things that are going to pan out in the next coming few quarters. So at present, what investors need is they need to look back into their portfolio, and as yesterday we witnessed a complete rejig in the central cabinet. So they need to look into the they need to look into the portfolio and have a look, and wherever excessive profits are there in their portfolio, let's book profits from the table and stay on cash at least 15 to 20% at this moment. And any dip the market gives, it's the best time to enter into the stocks with high quality business models and high quality management. That's the strategy. Let's take some profit from the table at present juncture.
Okay, so take some profits off the table wherever there are excess profits. This is the right time for you to do that. On the other hand, whenever these dips come in, you can enter into good quality names, fundamentally strong names for the long-term perspective as well. We'll talk about which those names could be in just a while from now. But overall, the markets still look positive. And at this point in time, you should also save some amount of cash as a piece of advice from Mr. Badini. Let's now talk about specific stocks. You did talk about that, how the earnings will pan out will be important today. We'll have TCS numbers as well. We're sure to talk to you about how the earnings season will go ahead as well. But right now, let's talk about your stock recommendations. You've given some very good star picks on our show. Let's talk about them one by one. First is Subex, which has actually given a whole lot of return to investors from the time that you had recommended to us, to our viewers back in the month of February. It's almost garnered about 190 odd % of gains. So congratulations for you to, talking about a stock and picking out that stock at a very early stage where it could have turned, where it has actually turned into a multi-bagger for many investors who listened to you and invested at that point in time too. Talk to us about that one. What is your recommendation now on that stock?
As I told you earlier, Sakshi, in your show right now, try to book some profit from the table at this time. Mm-hmm. I believe Subex at this point of time valuations look a little bit stretched at the current price movement is concerned. Investors can book 50% profit from the table at this juncture, and they can come back and stay invested in this stock if the market gives any dip. But the stock looks very strong. Technically, there is a buying interest is emerging at every up level. But still, I'm slightly cautious with respect to the price movement is concerned. When we advised Subex on your show back in February, it was a complete unexplored stock. In fact, when we were doing our fundamental research with respect to the stocks, and when we are building the earning models of Subex, before that time, the stock was hovering around 10 to 12 rupees. So as per our valuation matrix is concerned, earnings little bit, the valuations little bit stretch. So at present moment, the world explored this stock right now. So the earlier investors who invested in the lower levels, they can book profit from the table at the current price movement is concerned.
Okay, so Subex, it's already given 189% peak return from the time that Mr. Patini had recommended this stock on our show. And this is where you actually get such expert advices. In case you're looking for multi-bagger stocks, then this is the kind of show that you need to watch out for, because our experts really give you well-researched stock recommendations, which are fundamentally strong and can definitely turn out to be wealth creators for you. So once again, congratulations on taking out that pick. The other one that you had spoken about on our show is Piramal Enterprises, and this stock also in a very short duration has given robust returns yet again. What is your recommendation now on Piramal Enterprises? Should one stay invested, or is it still advised to be booking partial profits here?
Sakshi, who are little bit conservative investors, they can book profit from the table. But investors who have a high risk appetite, they can stay invested in this company. A couple of days back, the company completed 1,000 crores NCD also. The business model is perfect, and the company is in a well position to take the advantage of the growing uptick in the economy. The company have a fundamental hedge in their business model. 50% of revenues comes from pharma and 50% revenues comes from the financial services. And what we believe is in the coming few quarters, there will be a heightened activity with respect to their financial services business is concerned, and they're going to increase their retail footprints in financial services. So Pyramid Enterprises is in the best position to take the advantage in the uptick of the economy. So investors can use every dip in this stock to accumulate this stock for a view of a long-term horizon. Definitely, Pyramid Enterprises can be a game changer for your
Sure.
portfolio.
Okay, so Piramal Enterprises can definitely be a game changer for long-term investors. They can actually still continue to buy on dips. For those who are conservative, can take some money and profits off the table as well. Well, let's now move on to seeing which is the other stock that is on your radar and that could actually turn out to giving such, robust returns to investors in future as well. Which is your stock recommendation for the day, sir?
Sakshi, we have a very interesting story. It's called FiberWeb. How we come to know about the stock is India is a young nation, and every home have a toddlers, 1 2 years old kids. So when we did our analysis, and every home, every newborn babies, they carry a lot of pockets of uh, pockets of diapers at their home. In fact, they whenever there is a discount offer in the stores, they buy more cartons of diapers. That's the need of the hour for many homes who have a small kids. So when we were doing our research, we come across a company which produces a material which is used uh, across the diapers and hygiene sanitary ware. We come across a company by name FiberWeb, and the stock was on our radar, and we incubated this stock for more time. We observed the patterns of the company, how the earning flows that's going to uh, derive over a period of time. And Subex, FiberWeb, they are producing two types of specialized textile material. It's not from cotton, from polypropylene is their key raw material. So the spunbond and melt-blown is their key products at present. But the company
Sure.
is 100% export-oriented company,
Yeah.
which produces and supplies the best material for the Fortune 500 companies across the globe. This material
Sure.
is a specialized material. So and they're going to launch a new product that's called flat blown over a period of time, which is going to change their earnings. So currently the company is trading at a PE multiple of 10 PE, which is at a very attractive valuations, and just equivalent to their book value. Company is a debt free. So FiberWeb is in a best position to take the advantage of the uptick uh, in the real estate of US also, because one of their product is
Sure.
widely used in US for the real estate, the housing construction. So
Sure.
Subex is FiberWeb is in a best positions. Investors who have a long-term horizon, they can buy this stock at every dip. Even
Hmm.
though if there is an opportunity that comes in the market, use every dip in the stock to accumulate for a period of long term, and FiberWeb is going to deliver the best returns.
Okay, so fiber web should be on your radar over the next 1 year. There could be a sharp return of 35% that you could expect from the current levels. This company is solidly, has solid fundamentals and also growth opportunities in the countries internationally. Thank you very much, sir, for speaking to us and sharing your insights on the markets and these, star picks of yours and recommendations who've gone a long way in helping all our investors and viewers to really identify the right stocks for their portfolios. Thank you. It's been a pleasure speaking with you.
Pleasure speaking to you always, Sakshi.
Thank you, sir. And then now let's move on to see how the markets are really trading at this point in time. Remember, in the early morning trade, we had seen that the markets were slightly subdued and they were just hovering between the gains and the losses. Right now, clearly the markets are in the downtick. We can actually see about 0.6% of the declines for both the benchmarks, Sensex and the Nifty. The Nifty has slipped below the 15,800 mark. The Sensex also has given up that 53,000 level that it was holding on to in the early trade. The Nifty Bank is one culprit that's definitely contributing to the losses right now. Remember, this index has been rising up high in the last 1 or 2 odd sessions, but today it's down about 0.6%. What's still holding up, although it has come off to a high point of the day, the mid caps and the small caps still holding up in the green. We'll just have to wait and watch and see how this really progresses in the last 1 or 2 hours of trade, because every day we are seeing that the trade changes wildly in the last 1 to 2 hours of trade. If we are in the positive, we usually are seeing some selling pressure coming in, and if we are in the negative, we do see some buying action really taking place. Again, we are seeing similar kind of volatile moves. We just have to wait to watch to find out how the markets really end today. Let's see the sectors, how they are doing. Well, apart from the morning action, just a little while back, we had been witnessing that all the sectors, barring the realty sector, was actually in the red. All these sectors have been underperforming. They've given up the gains that they were trading at in the early morning trade. Some of the sectors that were doing well and holding up tight were, say, the PSU banks, the metals perhaps, the IT stocks, but even those are down in trade now. Look at the metal stocks. They are seeing a sharp fall of over 1%. Autos, FMCG, IT, pharma. So even the defensives are giving up the gains and the financials as well. Just mild gains remain in the realty space. Moving on to the gainers and the losers at this hour, the Nifty 50 gainers include stocks from variety of sectors: NTPC, Bajaj Auto, Shree Cement, IndusInd Bank, and Titan. The gainers right now, but they're all under 1% of gains, so not substantial movers as far as the Nifty 50 is concerned. For the laggards, let's look there how the picture has emerged there. Metals are taking a beating. Some of the auto stocks and pharma majors are also down about 1.5% to 2% in trade right now. Overall, the market breadth is slightly shifting towards the declines. How this changes, we'll keep you posted, and for that you need to like and subscribe to our channel, and also visit our website money9.com and stay connected with us through all our social media platforms so that you can get to know whatever is happening in the world of markets and personal finance. Thank you very much for tuning in.